Hello once again and welcome to this week's Realty Talk Show. The number of buyer inquiries to purchase property interstate has jumped significantly. But where they're looking to buy has also changed dramatically. Just under a quarter of all inquiries is coming from buyers based in a different state to the one that they were looking to buy in over the last 12 months. Now, that figure has jumped by 35% year on year. In this week's show, Emma Slape, Real Estate Institute of South Australia Director and CEO of Turner Real Estate, no relation, tells us that 1 in 3 of those inquiries are being channeled into one capital city, Adelaide. So what's happening? What's changed? Well, we're going to find out today as Emma is Bushy's guest first up in just a moment. And then in the second part of the show, Bushy is joined by Brett Wheatland, an award-winning property management consultant with over 23 years' experience, who sets about unmasking the rental crisis. He gives us a different perspective. Before we start, I want to say a thanks to our supporters and content partners, realty.com.au, BMT Tax Depreciation, Know How Property Finance, Get Rare Property, and Apiro Marketing. If this is your first time with us, a big welcome. You're going to find us on all podcast players and through the Southern Cross Oz Stereo Network. If you like the show, hit that subscribe button. Help us to continue to bring you the best guests every week. And don't forget too, you can join the conversation anytime on Facebook. Simply search for the Property Hub Collective. We'll be back in just a moment.
Property deductions can save you thousands of dollars each year. To make sure you maximise deductions, you need to work with the most experienced quantity surveyor in the country. BMT Tax Depreciation is the leading specialist in the industry. They've completed over 700,000 tax deduction schedules for residential investment and commercial properties Australia-wide. BMT guarantee to find double your fee in the first full financial year deductions. Call BMT on 1300 728 726 today for an obligation-free quote. Realty Talk and your host, Bushy Martin.
The share of inquiries from buyers to purchase residential property in the state has jumped significantly in recent times, and my good old hometown of Adelaide in South Australia has been the most popular state with interstate buyers over the last year. Well, to reveal what's really happening in relation to interstate interests and the impacts, if any, that it's having, we're joined by Emma Slape. Welcome back to Realty Talk, Emma.
Summer.
Now, Emma, interesting exercise, and there has been a bit of a change in appetite in this regard. So what's your local take on the changes to the level of interstate interest by buyers and buyers agents in recent times?
We've definitely seen a real uptake in that, probably in the last 3 to 4 years, I'd say. We're probably starting to see a little bit of it leading into COVID, and often it's driven by someone who might have grown up here, still got family here, know Adelaide. Certainly for a lot of property investors, knowing the area is important to them. And they just can't afford, particularly Sydney or somewhere like that. So they say, look, one day I might come back to Adelaide, or I love the security of Adelaide. I know that it's a really dependable market, and so they're turning to it there. We're also seeing, now that property prices have increased so much in Adelaide, and we're still seeing a very tight rental market, that investors with a budget will come along and say, I'd love to buy 2 properties in Adelaide. I really think that's going to be a better investment for me, both capital-wise as well as yield-wise, rather than buying in Sydney or Melbourne. And I think the Melbourne market definitely has people a little more spooked at the moment. So they're definitely turning to Adelaide, and dare I say Perth as well, because that demand is there, the economy is fairly strong, and long-term projections show that we are going to have strong demand for rental properties for quite some time, with both net migration and also a lot of industries investing a lot of infrastructure in and around Adelaide.
Well said. That sort of relative affordability piece is certainly a long one. But digging into the details a bit, what sort of property types, locations and price points are interstate buyers and their advocates focusing on?
Yeah, and we're definitely seeing a lot of people sort of come around and say, what could I buy for 5 to 600,000? And that's probably just the cusp of where we would recommend investing. If we have the capacity with the investor to look at something around the 700,000, we're starting to look at more of a family home in the outer suburbs. So we might be 20 kilometres out of the CBD, but we'd be looking at a probably 3-bedroom home, perhaps built in about the 1970s. It's going to be in a decent area with strong home occupiers around the area, schools, facilities, all those types of things. So it's going to be a well-performing rental long term. If the budget is 5 to 600,000, absolutely, we can still make that work. But we might be looking at something on a smaller parcel of land. We might be a little closer to the city. We're not going to get as much capital growth, but certainly there's still a lot of good quality units or small houses that we could get perhaps within 10 to 15 kilometres of the city in that price bracket as well. So again, it depends how long people are looking to hold and whether yield in the short term is more important or whether they want to see that capital growth longer term being the number one priority.
Awesome. Now, I'd love your thoughts on what impact, if any, is the increased level of interstate interest having on local property conditions? And if so, where and what type, I guess?
Yeah, what we're starting to see often with interstate investors is they are really keen to get into the market at a certain price point. They're very unemotional about their buying. So often they might be in the hunt for a property, but they might not be the successful purchaser every time. So turning to the sales side and what we see in that type of business, we'll see those offers, but it tends to be where they're really, really keen to secure something sooner rather than later. In the financial year sometimes has a bit of bearing there if they're looking to reduce their tax, but not just interstate investors, a lot of investors full stop in our circle at the moment, sort of waiting for prices to abate a little bit, waiting for bargains. I'm not sure if they're going to happen, but they seem to be investment ready. So what that tells us is now and in the next sort of 12 to 18 months, we will see those people enter the market one way or another. So some are looking for more of development sites longer term, those larger blocks of land that were perhaps built in the 60s and 70s, particularly in those sort of outer areas, looking to perhaps subdivide them into 2 or 3 properties. So we've also got that dynamic of an investor in certain pockets of the market too, particularly when you're talking about relatively flat land that makes it an easy subdivision project.
Yeah, absolutely. Now, I guess, given that you're on the ground and know the local conditions intimately, what's your guidance and advice for interstate interests that are relying primarily pretty heavily on desktop data and other people's opinions and looking to secure properties that are sight unseen in South Australia? What's your thoughts on that one?
I think understand the demographic of the area is really, really important. Some of the properties that may fall below the sort of 500,000-600,000 may be an area that attracts a different tenant demographic than would be ideal. Perhaps a much higher concentration of tenants in the area rather than owner-occupiers, and that will have an impact long-term on capital investment. You may also find a little more troublesome tenancy. So we would definitely say get to know what's going on in the area, talk to agents about where they see the pockets of different suburbs. And school zones are becoming more and more important. There's a couple of key schools in Adelaide, as there would be in every state, and sort of come April, May, when the schools are asking for those leases and 2 years in advance, we find those properties very hotly in demand. So if you were one of those, there's a price premium attached to that, which these days could be between $50 and $70 a week, which of course adds up over the longer term. So getting to know those subtleties is really important to make sure that you're absolutely maximising your investment and return on what is a pretty big commitment long term with property.
Thanks again, as always, for taking the time to join us here on Southern Cross Austereo's National Property Hub platform. Thanks, Emma.
No worries. My pleasure.
Successful property investment is a game of finance. Do you have the right team and the right game plan? Realty Talk is brought to you by Know How Property. More than mortgage brokers, Bushy Martin and his team of investment architects set you up with a sustainable strategy structured to lower your costs, tax, risk and stress while increasing your capacity for growth. Know How has helped over 1,900 homeowners and investors secure more than $800 million in property wealth. So get set to live more, work less, and live your legacy. Want to know how to invest in your freedom? Visit knowhowproperty.com.au.
This is Realty Talk, powered by realty.com.au.
Now, if you're purely getting all your information from news headlines in the mainstream media, you believe that there's no end in sight for our national rental crisis, with things only going to get worse. But is this really the case? Well, to dig below the state and regional medians and averages that are often misleading, it's actually better to hear it straight from the horse's mouth, so to speak, from active professionals that are in the industry or actually in the trenches with their sleeves rolled up, dealing with the actual reality. So to shed some light on this really important subject, we're joined by Brett Wheatland, an award-winning property management consultant with over 23 years of experience, who's actually leased over 2,200 properties in his time. And he's also the general manager of a specialised property management agency, Renting Adelaide. So welcome to Realty Talk, Brett.
Thanks, mate. Thanks for having me.
Looking forward to this chat. We've known each other for a number of years, but I guess to jump straight into the exercise, can you talk to us about what market rental trends you're actually seeing on the ground at the moment?
Well, we've probably just seen a very recent shift changing now, and we haven't seen that since, I guess, pre-COVID, where we are looking at a change in the number of inquiries across the board. There's been a significant drop, funny enough. It doesn't indicate the demand has changed. It just probably means there's maybe less people out in the market, but there are also less properties, as we know. So yeah, we are seeing that slowly shift. It could be somewhat seasonal. Pre-COVID, we used to flow into winter and things slowed down. Over the last 4 years, that hasn't happened, but I think maybe this year we're going back into that seasonal change, which is interesting. Yeah.
Yeah, nicely said. Well, sort of flowing on from that, Ben, is there any variation in the demand for different types of property profile, and if so, why, mate?
Yeah, we're definitely seeing a huge demand at the bottom end of the more affordable stuff. So obviously we've seen prices go up significantly, especially in the last 12 months. So we are seeing that affordability factor for most people. The average income hasn't changed a lot. So the demand in that lower end of, less than $500 a week is really, really strong. The top end of the market, a little bit slower now. And we've seen a ton of tenants buy properties, which has been great. We've seen loads and loads of tenants breaking leases to move into their own property, their own investment, because they've realised, hang on, why am I paying $500-600 a week when I could just go and get a mortgage effectively? Not that simple, but obviously they're being more realistic about what they can afford. So they're buying smaller properties, maybe units. They're looking to the more regional based areas, and therefore we're seeing them shift out of their fixed term rentals.
Yeah, and from a locational perspective, if we look at what's happening in and around Metro Adelaide, any variation in trends in the locational piece?
Yeah, we have seen some shifts. We've definitely seen the demand go up in the outer suburbs, and it's always forever going up in those outer suburbs simply because of the affordability. We are seeing stock coming to market, though, with these developments, down into places like Hackham, Onkaparinga Heights and Hills that have seen these new subdivisions opening up, and they're just growing by huge rates. We're seeing rent prices in that area go through the roof, simply because the demand is there. We've seen the apartment market and the city market pick up as well. I think obviously a lot of that is migration into the state that are seeing that as an opportunity to get themselves bedded down. So that apartment market, which has in previous years been really badly flooded with that COVID issues, that's now starting to clean out. And we're finding the older properties getting harder to rent. So the subs, I won't call them substandard because that puts them into a category that probably tells us they shouldn't be on the market. But the properties that haven't had the TLC from their investors, new kitchen, new bathroom, all that sort of stuff, those properties are getting harder and harder to rent because tenants' expectations for their dollars are getting higher and higher and higher.
Yeah, no, awesome. We're hearing a lot more about share housing interest. What's your read on what's happening in that neck?
Yeah, 100%. So another consequence of that city market and those marketplaces where we have students coming into the country to rent an apartment service, they are looking at their dollars now and making decisions to move into share house scenarios because we're seeing prices in uni lodges hit $400-500 a week, which is crazy. Obviously opportunistic probably from some of those providers. Equally, the demand is there, but we are now seeing tenants shift into the big properties, the 4-5 bedroom homes. We've got clients that have built properties specifically for those needs. They are always rented, getting premium rent. There's no headaches in that respect. But we are going to be seeing that shift into the rooming house market change as well, with the need to be, a provider as such, ticked off by the government. So that will be an interesting space to watch, I think.
Yeah, very good point. The legislation will certainly have some ripple effects. On the flip side of that, then, Brett, are there any types of property that are now actually proving difficult to rent? And again, we'd love your read on why.
Yeah, I think those dated properties that are just a little bit, I'll call them ancient. They could be 70s, 80s builds. They haven't had any love or attention. They're probably still in great nick. But I think tenants are expecting a higher quality of dwelling. That's come through education pieces. That's come through social media. That's through government. Policy and processes coming to play that tenants now are expecting a better quality property, newer property, and therefore those older dwellings, big blocks of land with big pieces of lawn that they have to cut and trees they have to trim and all that, becoming much harder to rent, simply because I think landlords are expecting the same sort of price. Sitting on 800 square metres of useless land, tiny little house. Whereas obviously from an investment point of view, we could put 2 properties on that block and generate twice the income. So those properties that are being snapped up by developers and investors obviously have to be rented out for a period of time until such time they get their approval. The building process takes a while as well. And we are finding them harder to rent simply because of that.
Yeah, no, well said. So if we sort of join the dots between everything you shared with us, what does this all mean for investor landlords both now and moving forward then, Brett?
Well, I think the good thing is that we absolutely have seen a shift in tenant expectations. Some property managers probably tell you that's a bad thing because they're getting more demanding. But equally, from an investor point of view, you have that, peace of mind if you've got a well-sized property. It's well presented. And when I say well, I'll call it modern. Let's use the word modern. That it's going to be a rentable dwelling regardless. You draw a circle around our city, push it 20 k's out, you can now push that probably 30 k's out, and 3 bedroom, 2 bathroom, anything built in the last 10 years is going to rent, and it will always be rented. It's that simple.
Yeah, no, that very well concluded. The penultimate question then, which, again, as I said in the intro, the news would like us to think that there's a never-ending rental crisis. What's your read on that? Do we still have one, and if so, in what sections of the market?
Yeah, we do, and I think it's something that we don't talk about because there are sections of that market that are absolutely struggling like never before, and it's that lower end of the social economic market that are very, very hard situations for those people that fit into that, I'll say, a price bracket to some extent under 500. Those tenants are really struggling because that is the most competitive part of the market. Housing affordability really falls into play there, and we're not seeing properties coming to market that can cater for that area, if that makes sense. Because really, we're talking now about a median rent of, let's say their budget's $450. It's only going to get you a 2-bedroom unit. Yeah. And if you need 3 bedrooms, you've got a child or 2 children, that's going to be really hard. So I think that market is becoming ultra competitive. And unfortunately, in some of that space, those people may not have the best references or have any references at all. They may be coming from abroad and have zero history. So it's making it hard for those people to find properties, property managers and landlords, probably being more scrupulous with their fact checking, their application processing, because it's a higher risk market as well. So it is super competitive, and that's the space where there is a crisis, and there will be. I think that's an area where the government probably need to step in and start providing us with some public housing that cater for those people that can only afford to pay, up to $450 a week for a 3-bedroom house, if that's even possible.
Yeah, no, very well said, and hit the nail on the head there. So look, I really want to thank you for these really hands-on insights, Brett, which as always does paint a bit of a different picture to the fear-fueled stories that we keep hearing in the news. So if you really want to find out what's happening on the ground in residential investment, reach out to a long-term local property manager like Brett, who'll have their fingers truly on the property pulse. So thanks again for joining us on the Property Hub today, Brett.
Thanks, mate.
And that brings us to the end of this week's show. Make sure you don't miss a single episode of Realty Talk or Bushy's Get Invested podcast, delivered to you each week by subscribing to the Property Hub now on your favourite podcast player or wherever you are listening to or watching this show. Also, join the conversation anytime on Facebook at the Property Hub Collective. A big thanks to our supporters and content partners, realty.com.au, BMT Tax Depreciation, Know Our Property Finance, Get Rare Property, and Apiro Marketing. I'm Kevin Turner, and on behalf of Bushy Martin and the Property Hub team, we look forward to seeing you again next year.